All about stocks this week. Another bad week at the market. What happens to your money? We'll find out how you can make a profit. Also, find out if there's a treat in store for you now that sugar has been decontrolled. And if the Ambani brothers are working together again, is there a way you can profit from India Inc.'s most prominent siblings? Welcome to All About Stocks. Thank you for tuning in. I know, it's been a very rough week. The Sensex dropped 500 points in just 2 sessions this week. The Nifty precariously traded below 5,500 on Friday. It might seem like a time to panic, but don't. Not yet. Let's first find out what's happening in our market, what's causing all of this trouble, and then we'll figure out how you can profit from it. There is an email ID at the bottom of your screen. You can send in a question if you have one about your stocks. You will also find a copy of this show on our Facebook page. Now, before I go any further, let me bring in Ajay. Ajay has a report on what happened in the market this week. Ajay, tell us what happened and also tell us what the long-term outlook is among the brokerages.
Thank you, Faye. Well, that's correct. Another damaging week for the Indian equities, down around 2% on the benchmark. So Nifty, after making a couple of failed attempts for a short covering rally, is finding support at 55.50, almost losing 600 points from the top we made at 61.50. FIIs have turned sellers in the market. The last 2 days we did see around $300 million each of selling coming in the market, which is a big concern due to $28 billion coming in the Indian equities on a year-to-date basis, and FIIs have only bought till now. So if the tide turns the other way around, there is serious downside risk into the Indian markets. Pretty damaging stock movements are seen this time. So financials like HDFC, ICICI Bank, Reliance Industries is caving in. This is clearly a sign that fund selling is happening, especially we are gathering that some of the exchange-traded funds are selling in the Indian market. So lower levels is what the traders are gearing for. Some of the sparks of strong areas are IGL, Maruti, but it's very rare to find a strong idea in the Indian markets. So earnings will be a big trigger, which could give direction to the market, along with the mid-policy review of RBI. But on a net-net basis, won't be surprised at lower levels on the Nifty in the coming weeks.
All right, Ajay, thank you for that information. Joining us in the studio to help us understand what's going on with the market right now is Prakash Diwan. I'm not going to introduce him because he needs no introduction on this show. Prakash, thank you so much for coming back, especially on a week like this. There's political uncertainty. European ETFs are selling. FIIs are selling. It seems like things are going to keep getting worse. Explain to us what's going on with this market and how much longer it's going to go on for. So if we are retail investors with our hard-earned money in the stock market, are we going to see it sort of disappear?
It's difficult to put a timeline to it, but very clearly the downside continues to be within the system. And as you said, all of these negative triggers have kind of coincided to make things worse. Had these triggers got serially, we would have probably managed them much better. But they all come together, and till there's a positive news flow which kind of reverses the trend, I think you should probably be ready to stomach a downside of about 150-200 points on the Nifty.
Okay, and what does that mean we should do right now? If I'm a retail investor watching at home, I have some money invested in the market, I'm looking at my portfolio, should I hold on? Should I be panic selling? Should I decide what to sell? What should I do?
No, I mean, first and foremost, you don't need to panic, because if you look at the macro data is slightly worse than what it used to be, but it's not kind of end of the tunnel, and this is not like that we're going to kind of get into a stage where nothing's going to change after that. In fact, the best thing to do is if you have profits on some of your stocks, and you could probably be making money at least marginally on some of the stocks, you could book profits, stay out of the market for a while, wait for the markets to come down, consolidate, and then kind of re-enter. So what I think people need to do is make sure that they don't panic, but you all the time don't need to keep on averaging at the same time. So wait for decent levels, and as we keep on saying, don't put all your money on day one or on a single day. Stagger it over a period of time. So if you had some money which was yet to be invested, these are great times.
Okay, so if I do have some money sitting aside, then I keep watching those stocks, carefully pick those stocks at this point?
If operationally the stock has not gone through any kind of a downtrend, the company's business hasn't got impacted, but the price has got impacted, there you have an opportunity to buy.
Ajay was telling us something a little earlier on the show. He said there's concern with earnings, especially with banks. There's likelihood that banks will disappoint this quarter during earnings. Is that something that's worrying you as well? What should we expect?
Yeah, I mean, there could be finally some pressure on the private sector banks as well, particularly in terms of not the NPAs, which has been the main issue with the public sector banks. But the issue could be with private sector banks not locking the credit growth that you would expect them to. And somewhere, that would start impacting on their numbers. The earnings could be much more subdued than what you've seen in the previous quarters. But that's a phase. I think banks will kind of tide over that pretty quickly because financials is one of the strongest elements of our economy. And I don't think we should get extremely worried about that.
Okay, all right. So we have to be prepared for some tough times that are coming up ahead. But Prakash, they're giving us a strategy we can use. Now, stocks we must talk about. Sugar. Government decontrolled sugar to abolish the 10% levy quota for 2 years. It has removed the monthly release mechanism. Now, this is a mechanism under which the government decided what volume each sugar mill could sell every month. Now, we saw sugar stocks rally. They're on your screen right now, with a possible rally in the short term as well. But for those of our viewers who are watching, they're interested in the long-term view. Has that already been priced in? What does it mean for these sugar stocks in the long term?
I think the rally was more of a sentimental impact. Certainly, you expected this to happen. It's happened, and it's happened much earlier than what people thought. But I think in the long run, sugar stocks, some of the well-run, efficient sugar mills would do extremely well. Sugar as a commodity globally is seeing firming up. Though there has been a scaling up of supply, you still have a lot of sugar going towards the production of alcohol and production of ethanol, which means that sugar prices are not going to be soft. And which means we also have export potential, we have good domestic farming prices. And usually in an election year, sugar always rallies, as a commodity for whatever reasons. So I would believe these stocks would do well even in the medium term.
So if you were to recommend one sugar stock to us, long-term value, good strong fundamentals, what would that be?
I would reckon an EID Parry, which is not a very speculative stock of sorts, much more steadier. Or from amongst the more popular ones, Bajaj Hindustan.
Okay, 2 sugar stocks that you could possibly consider at this point. The other thing we must talk about, the Ambani brothers are working together again, and that always causes a stir in the stock market. Now, RCom and RIL's Reliance Jio signed a 1,200 crore rupee deal to share RCom's optic fiber cable network. Now, the RCom stock jumped 6% in reaction. Let's start with RCom first. It had a rough year, that stock. Now, this could help it reduce its debt because there's money coming in and there'll be money coming in going further. This will also help it get better valuation for its Infratel arm as well. What does this mean for RCom stock for viewers who are holding it right now?
I think 1,200 crores is not a big deal, actually, if you see in terms of the kind of debt that they carry on the balance sheet. But yes, sentimentally, it shows that Reliance Industries or Mukesh Ambani is willing to back this up. And that is a big positive for the stock. For RCom. And gradually over a period of time, as we see the cash flows turn positive, RCom could possibly reduce its debt more efficiently than what it has been trying otherwise. But it's a long haul. It's not something that you could expect to make money. So it's not 65 to 100 in just a couple of months. You'll have to wait it out. But yes, the downside has been capped in RCom.
RIL, we should also talk about it. Does this mean that its 4G rollout will happen faster? Now they're looking at an asset-light possible telecom business. What does this mean for RIL?
Yes, which means not only in terms of quantum of capex, but the time to market would be much better. And remember, the 4G launch will be at a time when the other competitors have not been able to get their act together. So which means RIL has the opportunity to skim the market with very good pricing when there's nobody else available. So I think the RIL stock should actually respond much more positively. It hasn't because of sentimental reasons. But I think the RIL stock is much more keenly watchable than RCom itself.
So would you say we should pick up some RIL on Monday morning, given the market is also slightly lower now?
Yeah, you should continue accumulating RIL for other reasons as well. I mean, it's a good stock. Oil and gas has been doing well. The refining margins have been, and I wouldn't be surprised if this quarter numbers they actually clock very good earnings from the retail side of the business.
The other stock we must talk about is Larsen & Toubro. Now, L&T has won the deal to build a terminal complex at Abu Dhabi Airport by, of course, 2017. That's when that project will complete. The project costs about $250 million. At the same time, L&T's construction company secured orders worth about 2,000 crore rupees in the month of March. Look at that stock. still trading flat. Tell us why.
So I think L&T has been one of the casualties of the ETF redemptions. So L&T saw the selling in the last week, and that's actually brought the stock down because of the kind of huge supply of the stock. But the news flow has been quite positive. As you mentioned, the number of orders that they've received, and even in terms of earnings, they're still very confident of clocking what they've guided for. So it's a great opportunity to buy the stock for long-term investors. But just because some ETF wants to get out of the market doesn't mean that there's something wrong with L&T. It's a need for the ETF. So, these are opportunities, and I don't think there's anything wrong with L&T. At current levels, it's definitely attractive.
See, if anybody buys L&T at these levels right now, how long should I hold on to it for?
See, the fair value for L&T in terms of getting rated as a well-diversified engineering conglomerate is close to about 1760, 1740. So you could continue holding it for that long, and that's a huge upside from where it is today.
Alright, we have a question that I want to take right now because we're talking about infrastructure, and this is part of our portfolio question. Now, Murli C is our lucky viewer. We're taking a look at his entire portfolio because he tells us he's a long-term investor and he wants to know which of these stocks he should hold on to. They're all infrastructure stocks. Right on top of his list is GMR Infra, which he bought at 24 rupees. He has 4,000 shares. It's currently trading at 22. That ended the week at that level. What should he do?
I think he should hold on. There's nothing wrong with this particular company. It's closer to his acquisition price. He could probably, move out once he makes some profit, and that's really very, very feasible.
Alright, he has Godavari Power and ISPAT, which he bought at 200 rupees. It ended the week around about 85. It's had a very rough couple of months, this stock. What should he do?
This is a typical mid-cap story which hasn't been able to unfold the way it was anticipated when a lot of PE interest took place. And the valuation was slightly stretched, and I think he's bought it when it was at the peak of his momentum. He should exit out of this and maybe look at a Tata Steel at current levels. Tata Steel at about 310 is just ideal for him to recover these losses from Godavari, and it's the same sector.
Lanco Infra bought at 21 rupees. He has 1,000 shares. That stock came down to 10. But what should he do with Lanco Infra?
Here he'll have to bite the bullet, book some losses. His money is hard actually. But I don't see any kind of a respite with Lanco, so it's best if he moves out of this sector and this stock.
Alright, last stock on Murli's portfolio is Power Grid, which he bought at 96 rupees. Marginal profits there on that last stock. What should he do? Hold on to it?
Yes, he could hold on, and the other thing he could do is, even for Power Grid, if he wants to book some profit, which is marginal, he would probably buy Power Grid at a lower price, keep a target, and be very disciplined about it. So the moment it touches that low trigger, buy it out. But that's not something which is compulsory. He could probably hold on as well if he wants to.
Alright, time for a quick break on the show. When we come back, we will talk about Cain India, Reliance Power. We'll also do a quick check on Tata Steel. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you so much for staying with us. We know it's been a rough week at the stock market, which is why Prakash Diwan is still with us, helping us with our stocks investment. We have a question, Prakash, that's come in from Sundara. He's written in. He says, Cain India price has been on a downtrend for the last 1 year. I'd like to know what the main reason is for the share price to decrease so much. He also wants to know if he can buy Cain India at these current levels. Now, what I've done is I've asked my colleague Ajay to pull up a quick report of what's been going on with that Cain stock. Ajay, take us through what's going on.
Well, that's correct, Sway. Cain India is one stock which has underperformed the sector along with the market the past couple of weeks. From 350 onwards, it's come down all the way to 270, 280 and has tested the patience of a lot of investors, including funds, HNIs, as well as retail guys. Now the concerns weighing on the stock is that probably the company may not be able to stick to its production guidance, and hence the stock is underperforming. Going forward, just because the stock is so overruled among funds, there is a likelihood that any selling from fund side could lead to major underperformance for this particular stock, because historically we have seen that Kane PLC in every block deals have almost made funds overowned or high exposure in this particular stock. So likelihood that the stock may not outperform in the near term. Back to you, Faye.
All right, Ajay. Now, Kane India is also on your report card, Prakash. In fact, Kane India was recommended by you on this show in October 2011, but it was trading at 288 rupees with a target of 425. It's currently also trading at 288 rupees. The real downtrend began in January this year. Tell us what's going on with that stock.
What's pulling the stock down is, as I explained earlier, when ETFs buy into these stocks, they are the darlings of the market, and there is significant allocation that comes in. And when things go wrong for the parent organization or the ETF fund manager, they actually pull money out, in a significant way. And when they do that, these stocks, which are significant holdings, do get impacted. So you've seen that happen with Kane particularly. And Kane has kind of seen the selling pressure continuously for the last few weeks, if you notice. But there's nothing wrong with its business per se. So when that's the situation, you actually need to buy into these stocks, because you have money, the ETF doesn't have money.
So for Murli, for example, who wants to know if he should buy it at these levels, what sort of a target would you like to give him?
Well, he could probably look at getting into it and exiting again at that 380, 400 kind of levels, which is almost like 35%.
We have a couple of more questions that have come in. Sudhir has written in. He has 75 shares of Reliance Power, which he bought at 267 rupees due to the result of a conversion from RNRL to Reliance Power. He wants to know what the future is of that stock, and if it will ever reach that range again. Does it make sense to average at this point? Reliance Power ended the week at 64 rupees.
Unfortunately, the pricing of the Reliance Natural Resources stock, which led to this conversion, was slightly unfair to investors. I mean, that's something we can talk about in hindsight. But when I'm sure he got these shares, he probably didn't realize it. And our power has not been able to come out of the difficult times that it's always been facing with the UMPP projects. They committed to too much of big projects which they've not been able to do well on. And I think our power, the best thing for him to do is to wait for it to be in that 100 plus category, that zone, and then move out. He'll book a loss, but there's no way he could reach those levels. The best is to move out when it comes back to those 100 plus levels, and it does.
One more question has come in from Krishnamurthy Sridharan. He has 1,000 shares of LIC Housing Finance, which he bought at 240 rupees. He says he's ready to hold on to it for another year at least. He's also willing to invest more. What should he do? That stock ended the week at 222, LIC Housing Finance.
If he has money and the willingness to average out, he should. So it's a good stock. It had gone to the 295, 300 zone, came down because of the entire mid-cap carnage that we saw in Feb. But fundamentally, housing finance is a promising business, and LIC Housing Finance is one of the key players there. I don't see any reason why it cannot do well once things turn. So best is to average out at current levels, or probably wait for slightly weaker levels, but definitely could average out.
We have a question that's come in from Praveen, who says he bought shares of IFCI at 38 rupees. It's now trading at 26. Should he average or should he sell? He has a one-year horizon. Prakash, what would you like him to do?
I think he should move out. He's bought them probably at the peak of the momentum when, the banking license was in the offering. And IFCI is not a great story because it could slide further down from where it is. So he could cut his losses at this point, take the money, put it into some NBFC, some better NBFC like Sundaram Finance or M&M Financial Services, but get out of IFCI.
It's time for a quick break. When we come back, we'll talk about Tata Steel, Oriental Bank of Commerce. We'll also check Prakash's portfolio. On this show, we'll find out how it's doing. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. This is a show for long-term retail investors. We're helping you with your stocks investments, especially at a time like this when the market is giving us a bit of a difficult time. Prakash Devan is with us in the studio to help us with those investments. Now, for those of you who are regulars on the show, you know that Prakash designed a portfolio for us in November last year. We've been tracking the progress of that portfolio every time he's on the show to help us understand how we should manage our own portfolio. Let's take a look at the stocks Prakash has recommended for us. Now, we invested 10,000 rupees in these stocks back in November, and we currently have 8,915 rupees today, which means it's down 11%, but compared to the broader market, that's not too bad. We have to keep in mind that the market has had a rough couple of months, actually. Top of that list is KN India, after which he's also invested in Cipla, Coal India, ITC, Mahindra & Mahindra, Mahindra Satyam, Oriental Bank of Commerce, Tata Steel. Well, I want to talk about Oriental Bank of Commerce. It's down 26%, nearly 27% since we bought it. Now, that should be cause for concern.
It is, especially for a bank which seemed very promising when we added it. If you recollect, we replaced OBC, the ING Vysya, which we book profits out of. And OBC, to my understanding, was likely to benefit the most from the SEB restructuring that's happening. There's a lot of money that's pending from state electricity boards, and the central government has given them a package to convert all this debt from banks into bonds. So, which means the bank balance sheet improves, and OBC is one of the key lenders to some of the PS, the SEBs. What's not happened is that these SEBs have not confirmed taking this option, and that's exactly why the improvement is not reflected on the balance sheet of the bank. And other than that, generally banking stocks have really not been fancied. So the ratings, the valuations have come down. The fancy for bank stocks has come down as much as it used to be. But I'm still not concerned in terms of it being a dud. It's not a dud. It definitely would outperform once things look up. But the only thing is the wait gets slightly longer, painful. But I'm sure as soon as banking stocks start doing well, OBC would actually be the first off the blocks, or at least among the first few, and should kind of get back into the convincing levels that we seek.
So let's talk about Mahindra Satyam. You did mention a little while ago that you expect IT earnings to disappoint the market. Is Mahindra Satyam one of those IT companies that will disappoint us?
No, the IT expectation of IT earnings on the large caps is slightly overrated. So that's where I feel that the smaller ones are much more nimble-footed. In fact, they are the ones who've gone out into the market and got contracts which will start paying off. And Mahindra Satyam is, if you look at, we just got it into the portfolio after we booked profit out of HCL Tech, which has kind of reached a peak of sorts. And Mahindra Satyam is yet to start its journey, and I'm quite confident it will do well even in this earnings season.
All right, so for those of our viewers who bought this portfolio on your recommendation, what should they do now?
I think first and foremost, they don't need to panic, though we are talking about 27% or 25% reduction in some of the stocks. But that is bound to happen when some stocks do well, some probably don't do well or take more time to do well. So they shouldn't panic. If they have money, they could buy into some of these conviction ideas like Tata Steel or NOBC for that matter. But not at all to panic, and wait it out. Once things improve, it could take 3 months, it could take another 6 months, but the portfolio will deliver because it's a long-term portfolio. It's designed to weather all these kind of ups and downs, and at the end of that period, it should meet its goal, which is, let's say, about 15-18%.
A quick recap on the stocks that Prakash has recommended for us: KN India, Cipla, Coal India, ITC, Mahindra & Mahindra, Mahindra Satyam, Oriental Bank of Commerce, and Tata Steel. Keep sending in your questions. There's an email ID at the bottom of your screen. You'll also find a copy of this show on our Facebook page. Prakash, thank you so much. We value your time. We appreciate the fact that you came in this weekend. Thanks for watching.